Okay. Okay, so welcome to this module where we're going to be learning about candlesticks pattern, right? So I'm going to teach you how to identify and read candlesticks pattern like a pro. Initially, we spoke about introduction to candlesticks, where we talked about the anatomy and what the candlesticks is, what candlesticks are, right? So this particular class, I'm going to teach you about candlesticks pattern and how you can use it to become an effective trader, right? So what are candlestick patterns? Now, candlestick patterns are unique structures formed by individual or group of candlesticks, not more than three, that have been identified to inform a specific price action. Now, what do we mean? No, when we talk about technical analysis, we say technical analysis is your ability to look at past experiences to be able to analyze the market and speculate possible price movement, right? So in the past, people have discovered that whenever a group of candlesticks come together, initially candlesticks represent the price volatility, right? But then whenever a group of candlesticks come together, some people have been able to discover, okay, the moment this particular candlestick come together and then they form a structure like this particular reaction often follows next. Maybe after a particular candlestick was formed, there was a pump, or after a particular candlestick was formed, there was a dump. So people began to discover that that particular structure kept on repeating itself over and over again, and then that is what gave birth to candlesticks pattern. Remember, this technical analysis is very, very beautiful. Okay, even you yourself, you can find your own edge. Okay, you can find what you can discover your own patterns, because these patterns are discovered by people who have actually interacted with the market enough to identify these patterns themselves. Like I said, one of the things that's going to make you a very great technical analyst is your observation skill, okay? Your ability to observe and notice trends or recurrent patterns. Right? So these candlesticks are just like what? A group of candlesticks, not more than three, coming together to form a specific pattern or a specific structures that inform a specific price direction, price action. Right? So as we progress, we're going to be learning or having more better understanding on what I'm trying to, okay? These structures are smaller in size when compared to chart patterns. Okay, we're going to also learn about chart patterns. Now, chart patterns is when more than probably 10 or even 15 candlesticks or even 40 candlesticks, as the case may be, come together to form a pattern. That's when there are more candlesticks coming together. But when the candlestick is at 2 to 3, it forms a candlestick pattern. Okay, so let's progress. Classification of candlesticks pattern. Okay, we have 4 classification of candlesticks pattern. We have number 1, the bullish reversal candlestick patterns. We have the bearish reversal candlestick patterns. We have the indecision candlestick patterns, and we have the continuation candlestick patterns. Okay, I'm going to be explaining this one as each of them as we progress. Okay, so what are bullish reversal candlestick patterns? Okay, these are categories of candlestick patterns that indicate that buyers have seized control from the sellers and suggesting an immediate change in momentum. Look at it, the buyers have seized control. Now, let me just give you guys in a much more relatable terms. Now, when we say bullish reversal candlestick patterns, right, it means that the moment you see a bullish reversal candlestick patterns, it means the price is going to pump, the market is going to pump. That's what it means. Forget all this long grammar you're saying there. So when we say a bullish reversal, meaning the moment let's say the market is dumping, and then you discover that a group of candlesticks formed, and then this group of candlesticks are among the ones I'm going to listen to you here. The moment they form, you should begin to signal that, okay, Baba, begin to get ready for the fact that this particular candlestick has formed. It means there's about to be in opposites, a pump or a upward rally in price reaction. That is exactly what bullish reversal means. Of course, the market must have been bearish, so it was bullish reversal. By getting the check now. So now there are different types of bullish reversal candlesticks, a lot. Okay, I'm just going to give you guys a few. I won't say much about it because these are things that you need to actually go and discover yourself, right? But I'm going to give you guys some guide that can help you guys to understand it better. Okay, so we have the hammer, we have the bullish engulfing pattern, we have the piercing pattern, we have the tweezer bottom, and we have the morning star. Okay, so this is exactly how they look like. This is, I wouldn't want to say much there because these are things that as you practice, I'm not expecting to cram them. See, you're not to cram them. Even me myself, I don't cram them. I'm just going to teach you guys how you can use them. Okay, you don't need to cram them. Okay, just know, just have an idea of the operation of candlesticks. Okay, then the moment you're doing your structures and then you discover that there's a pattern forming, there's what we call the chart pattern cheat sheet. You're just going to get the cheat sheet and then you're just going to check it. If you see any candlestick that resembles what's on your chart, then you just take the decision that favors. You don't need to cram them. Okay, so you can see how the bullish engulfing pattern is. Okay, you can see how it is formed there. There was the market was, remember I said the market was going down, the bullish reversal. That's what they call the bullish engulfing pattern. Okay, you can see the market was actually red before, and what happened? Then the market reversed and started going up. So that's what we call it, a bullish engulfing. And when we say engulfing, just the way the name implies, engulfing, the bullish candle, which is the green candle, is engulfing the red candle. Ideally, it was supposed to, this green candle of the bullish engulfing is supposed to be like ×2 of the red candle, but I think I made a mistake when I was drawing this thing. But then I just explained now, you understand it. But even some of the materials I would be giving you would help you to understand this concept very, very well. Okay, so when we see a bullish engulfing pattern, you should begin to signal that, okay, begin to get ready that the price what's about to reverse. Okay, and then there's another beautiful thing about this bullish engulfing pattern. Okay, we talked about order block. Okay, or you learn it in subsequent videos. Now, order blocks are, no, let me not say much about it. You're going to learn it, okay? But this bullish engulfing pattern can also serve as order block. Okay, when you get to the order block session, you're going to learn more about order blocks. Okay, but then just remember that I said the bullish engulfing pattern serves as a bullish order block. Okay, so the next one we have is the morning cycle. You can see how it is forming whenever you see a group of candlesticks coming together to form this structure. They should be able to signal that begin to get ready. Your price is about to pump and begin to go up. Okay, they also have the hammer. Okay, you can see how it resembles. It's just like the hammer of the Thor. Okay, you can see how the hammer is. So the moment you're on your chart and they discover that at a key area. Remember, these candlesticks, they don't just form anywhere. There has to be a specific place that they are forming before you take a decision. Okay, they can form anywhere, but whenever they are formed at some irrelevant places, they might not have so much meaning. But there are certain key areas on your chart that the moment they form there, be very, very rest assured that the price is most likely going to reverse and start pumping. Okay, we also have the tweezer bottom. Okay, so the moment you discover that there are a lot of them. Okay, if I want, there's what we call the candlestick Bible. You can go on Google and just search Candlestick Bible. It's a voluminous book. It's big, but then there's a lot of candlestick that they explain there. Okay, so you can just download it and just glance through and have an idea of some of the candlestick patterns that we have around. Okay, it's going to definitely help you, and yeah, it can also serve as a confluence for you. You know, we talked about support and resistance, trend line, and a lot of that. So now you're now beginning to learn some of the things you can actually be looking out for before you take a trade decision. So let's assume you've identified that price is at your support and prices have price. Okay, let's assume that you say price at your support and probably price at your demand zone. So you're going to begin to look at, okay, what pattern is forming there. Okay, if you now see a bullish engulfing pattern, it's another confirmation. Okay, I'm beginning to see a bullish engulfing pattern. Price there at a support zone again. So what are you waiting for? The price is going to pump. Okay, so that's how you take some decisions and become a profitable trader. Okay. So let's go now. Bearish reversal candlestick pattern. Okay, and these are patterns that indicate the sellers are gaining momentum in an uptrend and suggest a possible pullback. It's just the opposite of the bullish and reversal candle. When we say the bullish reversal is when the price was actually going down, and then the candlestick was formed, the pattern was formed, and then the price reversed and went up, right? So the bearish reversal candlestick pattern is just the opposite. These are candlestick patterns that form whenever the market is pumping, and then the moment the market is pumping and you spot some of these patterns, you should begin to notify that, okay, begin to get ready. There's about to be a reversal and the market is about to dump. Okay, that's exactly what these bearish reversal candlestick patterns are. Okay, so we have the shooting star, the bearish engulfing pattern, the dark cloud cover, the tweezer top, and the evening star. Okay, this is just like opposite. Don't worry, by the time you look at the structures, you see that they are almost similar. Okay, there's just a slight alterations, and yeah. So you can see the bearish, it's the same thing. Okay, you can see the bearish reversal candlestick patterns. Okay, that is pictorial illustration. You can see the bearish engulfing pattern. It's just like what we did the bullish engulfing pattern, where it was a red candle and then the green candle swallowed, engulfed the red candle. Okay, but this particular case is a bearish engulfing pattern. The market was actually going up. You can see the green candle, the market was going up. And then what happened next? A red candle formed and engulfed the green candle, and that would signal that the market's about to reverse. Okay, and we have the evening star. If you just look at the structures. Okay, these are not things that I would want to waste too much time explaining. Okay, like I said, I'm going to give you guys some materials that can help you understand it better, right? So we have the shooting star. You can see how it is forming there. It's just like for the bullish reversal, we had the hammer. But for this particular case, now we had the shooting star. You can see how they're just the color difference and probably the position difference. But in fact, most of this, if you can go back on this video and go and check the bullish engulfing pattern, you see that they are just like the opposite. You can see the tweezer top. We had the tweezer bottom, and now we have the tweezer top. You see, so these are just what things that you can easy to assimilate. I'm sure you're going to get good result if you learn how to use them. All right, so we have the indecision candlesticks, right? And this category of candlestick indicates a tie in both buyers and sellers pressure, a state of equilibrium between sellers or buyers. Okay, sometimes, when we say the market is like a tug of war. Okay, let me give an illustration. Imagine you are doing a tug of war in your secondary school, right? Maybe you and your team, you guys are pulling hand, and then both people have equal power. Maybe your team and the opposite team have equal power. Now you guys are pulling. Nobody's willing to let go. That particular moment. It can also be represented on the chart, where neither the buyers or the sellers are in control. They all have equal power. So it is represented by the indecision candlesticks. And then we basically have two types of indecision candlesticks, right? We have the spinning top and the doji. So whenever you see this particular candlestick, be rest assured at that particular moment there is a tug of war. People are fighting, like the fight is so much. Nobody's willing to let go. The people that are buying are not willing to let go, and the people that are selling are not willing to let go. Okay, they just have an equilibrium. Okay, so let me show you how it looks like. You can see it. You can see how it is just by looking at it. You're going to know that it's an indecision. You can see the first one spinning top. The buyers are trying to push this. It's just like a plus. The wick at the bottom and the wick at the top are of equal sizes. Okay, it's just like a plus. The people, they are fighting, but nobody's willing to let go. Okay, so you can see the doji, just like a plus. So these are just what they look like. So you see that the more you interact with your market, the more you're going to see these candlesticks forming very, very. You can see the dragonfly and the gravestone doji. Okay, so these are candlesticks that it's easy to learn. In fact, you can just go on your chart now and begin to check them out. You discover that anytime this particular candlesticks form, like there's more like an equilibrium there. The market is not so much moving further. Okay, so now, but let me teach you how to use these candlesticks now, these indecision candlesticks now. Just imagine you're in tug of war with your school, with your secondary school, right? And then your team and the other team you're doing, nobody's willing to let go. Imagine what will happen if one person won. Like imagine that your team was pulling and then your team eventually just, after a period of time, your team just won. You can imagine the force that the other team will use and fall. That's so that if once the indecision candlestick is forming, right, for you to know what to do next, wait for the next candlestick to start forming. So the moment you see an indecision candlestick, in order for you to know where the market is going to head next, wait for the next candlesticks to form. So the moment there's an indecision candlestick and then the next candle that form is a bullish candle, then have it at the back of your mind that the bulls have won. So the market is most likely going to pump upward, because an indecision is not supporting the bulls or the bears. It's just there in the center. So it's whoever wins is who takes the race. Okay. So after an indecision candlestick, the next candle that forms will decide your trade decision. Right. So that's exactly how to use the an indecision candlesticks. And like I told you guys that you'd learn during the order block. Not I told you guys during the order block, you're gonna understand that these indecision candlesticks can also form as an area of what, or they can also serve as an order block. Okay, because you're agreeing that there's a power tussle there. So because of that power tussle there, there's a pile of orders there. So sometimes they can serve as a valid order block. So have that at the back of your mind, okay? So continuation candlestick patterns, okay? Now remember, we did the reversal, bullish reversal, bearish reversal, indecision, right? Now, what are these continuation candlestick patterns? Continuation candlestick patterns signify that the market is likely to continue trading in the same direction. So let's assume that the market is pumping, and then you discover that a particular one of these few candles I'm going to be listing here begins to form there. You have at the back of mind that the market is going to continue in that direction. So the market is going up, and a continuation candlestick pattern form. Then have it at the back of your mind that the market is most likely going to continue pumping. Okay, if the market is dumping and a continuation chart pattern forms and candlestick pattern forms, it means the market is going to continue dumping. Right? So we have the rising tree method, the falling tree method, the bullish harami, and the bearish harami. Okay, these are structures that you could just go on Google and get more information about them. Okay, like I always recommend you use baby pips, because you can just see them here. Okay, you can see how the rising tree is. You can see how the falling tree is. You can see how the bearish harami is, and you can see how the bullish harami is. Okay, the bullish harami and the bearish harami are almost similar to the engulfing bars. Okay, but there's slight difference. Okay, so like I said, I'm going to give you guys some guide, or you could just take it upon yourself to go on Google or YouTube. No, Google specific. Just go and type rising tree method, and then you're going to read about it just a little bit, and you're going to understand how to use them to trade properly. Okay, the idea of this particular training is not to make you lazy, but to also spur that desire to want to study your own, because nobody became great by just watching one video. And no. If I tell you how many videos I've watched on candlestick pattern, you'll be surprised. Okay, so ensure that you don't just become lazy and rely just on one source before you gain mastery. No, learn to seek clarification from other sources so you can better enhance your discernment. Okay, now how do you use these candlestick patterns to trade? Okay, number one, identify your underlying market structure. It's always repeating itself. It always starts from identifying your market structure. All right, then look out for candlestick patterns at area of value, because you know what areas of value are. Then confirm your bias using other tools. Of course, like I said, you don't trade candlestick alone. In fact, you don't trade anything alone. You must look for a confluence. Okay, look for a confluence at your support and resistance, trend lines. Look for other confluences too before you take a decision, which is the final step in using a candlestick. Okay, so let me just show you guys a pictorial illustration and call it a day for this section. Okay, you can see it. I've identified my structures here. I've identified my support. I've identified my support and resistance. I've identified my trend. So I knew that, okay, the price is currently at the resistance, right? So as the price gets to the resistance, I now look for a candlestick pattern. Of course, look how I found. I found a bearish engulfing pattern. Of course, what's the bearish engulfing pattern? A bearish engulfing pattern is a reversal candlestick. It means price is about to start falling. Okay, but did I just take a decision that price is going to fall? No, I first confirmed that price is at the support, at the resistance, sorry, and then I confirmed that the trend line has broken. Okay, had I been drawn my trend line, you would have discovered that the trend line has broken. Okay, if you look at the tip of this red bar has actually broken the trend line. Okay, so you can see what happened here. You can see that after the break, what happened? The market reversed and the market headed back to my support. Because that's exactly how you use your candlestick pattern. They are not hard, okay? Like I said, don't use them alone, okay? Always use them in confluences. Make sure that they are what their specific areas of value before you take any decision or any trading bias, okay? So keynote using candlestick patterns, and we'd call it a day for this training. Number one, most difficult tool to use. It's difficult to spot candlesticks. Do you know why? Because there's a lot, like the chart is full of candlesticks. So there's a lot of distractions there. That is why sometimes I use candlestick as my last resort. Okay. As someone that is just starting out now, you can actually use candlestick and still getting good results, right? But then because of the chart is full of candlestick patterns, and then it can be confusing. So they're the difficult tool to use in trading. Okay. Should be used as for confirmation purposes only. Of course, you can see how I confirmed it in the pictorial illustrations. I first of all identified my structure, my trend line, my support and resistance before I took a decision. I didn't just look at it, say, I've seen it engulfing. No. So you always use it as a confirmation. Okay, there are over 1,100 patterns. It's no point cramming them. Okay, like I said, it's just going to occupy space in your head, so you don't need to cram them. Okay, and there are cheat sheets. You can just Google is your friend. Okay, just the moment you see a pattern forming, just go on your Google and type it, sharp. You're going to see what is most likely going to happen, and you take a decision that favors that bias. Of course, you can read the Candlestick Bible, or I'll also send a book by Renatio. I think you're just going to learn one or two things about the candlestick patterns and how you can use it to get better understanding. Okay, if you can get a printable printable pattern sheet and have it handy. Okay, by a pattern sheet, I mean you can just go and print it. Maybe you can just go on Google and search candlestick pattern sheets. You're going to see it on that particular sheet. You're going to see a lot of candlestick patterns and possible reaction that is going to happen. Okay, just go and print it. That's if you want to print it, you can print it and just keep it handy, or you could just download it on your phone. Okay, whichever one. So you can always make reference to them as you trade. Okay, it's not so much a big deal. Okay. So thank you so much for staying to the end of this particular section. I want to trust that you got value. So we'll be going to the next section, right? So like I said, read the Monster Guide by Renatio. It's one of the bonus sections. So just go and find the book and read so you can better understand how to trade using chart candlestick patterns, right? So see you guys